Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So by any measurable standard, the month of September has not been good. The markets have taken a hit, no doubt. Started off the first couple of days okay, it was looking pretty good. And then, we blinked and then all these news reports of, we had a couple down days and then we had one day where the market dropped like 1.7%. And then there were these lists of reasons why the markets are not doing well in September. And so I wanted to cover a few of them because I think I see some common threads and I wanted to share them with you. So let's go. So the first report that I read about was fear of this company in China. It's a real estate company and it's been buying up real estate like it's going out of style. And they've been borrowing a lot of money to do it. And there's some fear that that company is going to default on its debt and that would somehow start a global economic collapse. Well, those fears pretty quickly disappeared, even though the media reported them as if they were real. Once everybody learned that, okay, well, they really have some cash on hand to cover their current debt service. And even if they didn't, China manipulates its currency and its economy all the time. It seemed pretty clear that China would step up and do whatever it needed to keep this company from folding and causing some sort of real or perceived economic collapse in China. The next one that I commonly saw reported was fear of what the Fed is going to do to try to stifle inflation, to try to stimulate the economy. Is the Fed going to raise interest rates? Oh my gosh. Well, of course the Fed's going to raise interest rates. We don't know when, but they have to raise interest rates because they've kept them next to zero for way too long. And, I was reading a report today that, today's market volatility is because the 10-year Treasury, today and yesterday, the market volatility in the last couple of days have been because the 10-year Treasury is above 1.5%. I'm just stunned by that kind of reporting. I mean, seriously, does anybody really think that the financial stability of any company or person is going to be tied to the 10-year Treasury going from 1.3 to 1.5? I mean, seriously. It doesn't make any sense, but that's what the media reports. And when they talk about, what changes, Fed's going to make it harder to get loans and, all this stuff is just fear. So the third one that I commonly see reported on is fear of the Delta variant. So, the COVID is changing, right? We've got different variants after COVID-19, different variants that infect us in different ways and infect different people in different ways. And some are, more transmittable, but, less damaging. And the reality is that this is like a flu virus, and like the regular flu virus, it morphs every year. And so what we need to learn to do, and what the government needs to learn to do, is, teach people how to cope with, having another virus that, isn't necessarily great, especially for people that are at risk, diabetes, older people with other health conditions. So the real fear comes to what's the government going to do? Are they going to potentially shut things down again because more people are testing positive for this Delta variant? And on a side note, I do wonder, when did we switch from being concerned about the fatality rate and the occupancy rate in our ICUs and in our hospitals to how many people test positive for the Delta variant? Because the two things are completely different, right? If everybody in the country tested positive for the Delta variant, but the hospital occupancy rates didn't skyrocket, then is that really, I mean, it's horrible for those people that are being adversely affected by it, the people who have died and the people who have long-term health side effects. I mean, of course, that's horrible. But in the grand scheme of running a nation and a national economy, is the fact that more people caught a virus, a cold, which again, I'm not saying that the Delta variant of the coronavirus is the equivalent of a cold, other than they're both viruses and they're both seem to gonna be around for a long, long time. So really the biggest fear is, what's the government gonna do and how's that gonna affect our daily lives? The fourth one that I commonly see is, the federal government is reaching the end of its ability to spend within the confines of the current debt limit, and there's fear that the government's not going to extend or lift the debt ceiling, and that the U.S. would default. Now, the way the media reports it is we're going to default on our debt, but that's not really what has to happen. I mean, think about it in terms of our daily lives. Let's say, in any given year, your expenses exceed your income, and now you've run out of savings. What are you going to do? Well, is the first bill you're not going to pay going to be, your rent? Is it going to be food, right? No, you're going to make other choices like the cable bill. Maybe we can do without cable. Maybe we even have to do without, the unlimited data plan on our cell phones. There's lots of things we make conscious choices about the bills we are or aren't going to pay. And we certainly don't start with the one that's going to make us homeless from the outset. And that's what the federal government would do. Before it ever got to the point where it was going to not make the interest payments on our debt, there's a lot of different spending programs in the United States that would probably be on the chopping block well before we would ever default on our debt. So the last reason, and I find this one the most nonsensical, is, well, statistically, September has been a bad month for the markets. And I'm not even sure where to go with that. I mean, again, seriously, does anybody think that, let's just imagine that it's December 1st, and in the last 10 years on December 1st, it rained 9 out of 10 times. Are you going to immediately on December 1st of this year grab your umbrella before you go outside? Of course not. You're going to look out your window and you're going to say, what's the weather look like? And if on December 1st it's sunny, you're going to leave the umbrella inside. So this idea that because past Septembers, the markets have statistically, like around 3/4 of the time, not had positive returns, that's interesting, but you should make your decisions based upon the reality of economic conditions in the moment, and not this, well, on December 1st, it rained. Don't do that. Now, in the same note, if we're going to really, for those people who like investing that way, statistically, the fourth quarter of the year, over the last 30 years, again, roughly 3/4 of the time, the fourth quarter of the year has had good positive returns, on average a little over 5%. So again, I'm not recommending that anybody invest that way, but it's just another example of how people aren't necessarily, and especially the media, aren't using math and data to educate you on what's going on. And as I look at the markets today, what I just see is just normal volatility. Yeah, it's accelerated when the media stokes fear, and then you get institutional investors, playing some games with the market where they maybe say, oh, well, if we can convince enough people to sell, maybe we can make bets that it's going to go down, and all these things sort of feed on each other. So the long story short is, the economy of the United States is continuing to recover, and recover much faster than any other nation on the planet. We still have almost 11 million jobs that are available to be taken by anybody who wants to take them. And some see that as a negative sign for the economy, but I see it as a total positive, because that means that there's businesses that are alive and kicking who are desperately seeking people to fill jobs so that they can continue to grow. And with all the stimulus money that we still have laying around, there's plenty of money for, that these businesses want to be able to get from you and me, from we the people. So they're going to do anything they can to get people off the sidelines and into these 11 million jobs. Heck, I've heard occasions where nurses are being offered $25,000 bonuses to sign on. I mean, it's amazing. Now, again, there are, not everything's positive in our economy, but we definitely are headed in the right direction. So as you read these media reports and people start trying to say, well, there's fear of this and fear of that, just look for those words. If they're telling you why something's happening and it's because of fear, odds are it's because they don't really know what's happening and they're just guessing. So, sort of a long update. If anybody has any questions about this or any other financial matter, please send me an email, reply to this update, give me a call on the phone. I'm here all the time. I'm happy to answer any questions that you might have about this, any stock market, the economy, be it local or global. I'm here to help you. So that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back again soon with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.